Hello, Maverick Traders. This is Rob Reinhold. It is Tuesday, April 19th, and the market had a nice up day today. So we had the Dow up about 1.5% over 500 points. We had the S&P up 1.6. The Nasdaq was up over 2%, small caps 2%, and you can see oil took a hit, and so did gold. Most everything worked today. And what I want to start off with today is the sector heat map. And you can see that everything except for energy went higher today. There's a little bit of red there. You can see Pfizer down 3.2%. But really, this is a very solid up day. But what I want to do is, it's very difficult sometimes when you just see one day to make some sort of decision off of what this means for the market. This is where we love the charts at Maverick. So if we go into the chart, the big question here, did anything change today? Now, look, we had a big green candle. That is a very impressive candle. The problem is that we are still in a range. That's the problem. We're still in a range. And if we go ahead and take a look at the Qs, we can see that they're still in a range. While today was very impressive, nice up day, it does not change really anything in my mind as far as where the market is likely to go. If we can get another update tomorrow, I'm all ready to change my mind. But until then, I'm going to need a little bit more from this market. One thing to note is that after market, Netflix came out with earnings. It was disappointing, and Netflix is down 20% after hours. So again, we had these candles that had very nice candles today. Very nice update. We did not break out of any range. We are still pinned between the 20 and 50 period moving average. We're still pinned between those. That's no man's land. Nasdaq is looking a little bit worse. We've definitely liked the Nasdaq short a little bit more than the regular S&P market. But it's just telling us that this market hasn't proven anything yet. And if you take this last candle and then you subtract about half of it, that's what the candle would look like if it calculated on the Nasdaq futures of what happened after hours. So expect tomorrow there to already be a nice gap down to about half of what the Qs put on today. It's telling me that the market hasn't done anything yet. So with that in mind, let's take a look at our market outlook. We had a -1 and a -1. So we had a monthly outlook of slightly bearish, and our weekly outlook was also slightly bearish. And Darren on the weekend said that he thought that we were most likely going to hang out here in this area. And that's really what we're doing here. As I said, it was a really nice day today on the long side, but you cannot get overly excited about this. It hasn't done anything. We have no technicals. We have a 20 and a 50 period moving average that are flat. It's just not telling us anything at this point. And so I think we just have to stay more neutral to bearish, because this market really isn't giving us any clear indications one way or the other. As always, the sectors tell a different story. Where the market is so-so, not so clear, there's things that are really running now and things that are really falling. So let's take a look at some potential trades. On the bullish side, I had to stop putting in energy ticker symbol names because there's so many of them. There's so many of both the energy and the materials sector. Things like Mosaic and CLF. I mean, it's just, they are really strong right now. And this is all tied to agriculture and commodity prices. So we're going to talk a little bit about one of the energy plays, but I wanted to start out here first with IRM, Iron Mountain. This is in real estate. And they actually, you can see, had a nice high base. Now, last week, I did a diagonal call spread on this. Turned out very nicely, because on those diagonal call spreads, you want it to go sideways or slightly higher. That short call expired on Friday and got a nice little pop today. Now, yes, it did give back a little bit of its gains near the close. We need to see another candle for it to be a really nice breakout. But this is when the diagonal call spread strategy works perfect. You get in the position when it's basing. The whole time it's basing, you're making money. The short call expires, and then it breaks out to the upside. It could be a really nice gain on this one. I do like this one for a new position. I think it looks just fine here. But remember, this is not a crazy tech stock. This thing's going to go up to 58. Like, that's the best you can get for a target here on IRM. In the energy sector, this is one that I played a couple times back in early 2022, and just been watching it as I've been playing other things like Chevron and RRC. As you can see here, we had a huge run, and then we really topped out the first week of March. And the stock has just taken a break since then. This thing went from 10 to 20. It doubled. Whenever something doubles, you have to expect it's got to take a breath. It's got to take a breath. The question is, when people finally stop and take a breath, do they say, oh, you know what? We overdid it. We overdid it. And you know what? We're sorry. We'll go ahead and take our profits and move to the next one. Or when it's taking your breath, is there a winding up of potential energy? And that's what I see here. I see that we've got a sideways motion after 100% gain. People were still basically balanced on whether to buy or sell this stock. I like this one. This one's going to be heavily tied to oil and gas prices. So if energy has a nice up day over the next 2 days, this thing will probably break out and make a run up to the 26 area. If we stay in this area, then, we're just going to be doing this ascending triangle until we break either above or below. But I do like VET, especially for a diagonal call spread here. If you're looking to be very directional, I think you have to wait for a breakout. Outside of the energy sector, this is H&R Block. They actually had earnings today, came out better than expected, but we had already broken through the prior resistance, came up, and we just based for 5 days, and then we had a nice breakout to the upside today. This one, again, is not as sexy as something like a Netflix or a Tesla, but you can see this thing moves pretty easily in dollar increments. So here we are at 27.70-ish. 28 is probably the best you can hope for on this. If you can squeeze out some sort of trade on that, diagonal call spread or maybe a narrow vertical, it might work. But again, really nice looking stock. And if you're willing to hold this into, May and June, I don't see any reason why this thing cannot make it up into the 30s by then. On the neutral trades, let's take a look at neutral. Now, Airbnb came up on my screener as a good neutral candidate. And you can see what we like to see, flip-flopping moving averages with no clear trend whatsoever. And that's all we're getting here with Airbnb. So the big question is, okay, where's the range? So if we had to go out and say, technically speaking, where's the range of the stock? Where does it spend most of its time in? Yes, I know it got above here and below here, but for the majority of the last 4 to 5 months, we've been between roughly 155 and 175. So that's the range. That's the range. And you really get to decide where you want to pin this as far as a butterfly or a condor. Do you want to be right at the money, which would mean you would do something like the 150, 170, maybe up to 190 butterfly? Or do you want to be slightly bullish? Say, hey, you know what? I think it's more likely to be at the 175 area. That's just fine. You can just adjust everything. Maybe like the 160, 175, 190 butterfly. If you're saying, hey, you know what? I think this is going to go a little bit lower, then 165 is going to be your point. And then again, just adjust your trade accordingly. But there's no question here that the 155, 175 range has been where the stock has been the majority of the time over the last 4 to 5 months. And there's really not any reason to think it's going to be different. The stock doesn't have earnings until next month, somewhere around the 14th. So there's plenty of time to take a look at some sideways strategies on this one. I wanted to throw up Netflix here. So Netflix had a big little bounce today, up 10 points. It is all the way down to $266. I wanted to just get in here and show the technical damage that's been done to Netflix. And really, we have held this, let's call it $330 price target since the lows in January. And we're going to plunge right through those. I could easily see Netflix down 20% after hours. I could easily see Netflix only being down 10% tomorrow. Maybe it stays down 20%. A lot of times, the after the market tends to be the most emotional time where people really freak out, moves prices significantly higher or lower. By the morning, cooler heads have prevailed, and we come in and get a better price, but it's going to open down. And so it's a clear break here for Netflix. What does that mean for the Nasdaq and tech stocks? Well, if you follow Netflix at all, you would find that Netflix actually had a negative beta for a lot of its life. Now, beta is a measure of volatility. And I remember when I first came across this phenomenon, I was so confused because what I had learned was that the S&P is a beta of 1. And it takes the stock and it measures how volatile it is compared to the S&P. And so if your stock had a beta of 2, it's basically saying that it is twice as volatile as the underlying SPX. If you had another stock and it had a beta of 0.50, it would tell you it's half as volatile. So by looking at beta, you can see, okay, how volatile is this stock? I remember coming across Netflix, and this is probably back in like 2006, 2007, and had a beta of negative 0.7. And I thought, okay, surely that's just bad data. That's just bad data. No, it's actually was good data. So in the beta score, it measures how correlated something is to the S&P. Netflix at the time was actually showing a negative correlation to the S&P, meaning that when the S&P went up, Netflix usually went down. When Netflix went down, the S&P, or when Netflix went up, the S&P usually went down. Netflix has never been all that highly correlated. And outside of things like maybe Roku and a couple other similar stocks, I actually think that the damage from the Netflix earnings is not going to be all that widespread. So where I'm looking for a down day tomorrow, I think we do get a down day, especially in tech. I don't think it's going to be brutal. I think we're just going to stay in the range that I talked about. So I'm not looking for any trades off of Netflix. The volatility is going to be really high in the morning. And if I'm looking at any trades, it's going to be likely later this week or into next week. On the short side, I do like Wayfair here. Their question of this one is just when. When is this going to break? It has been descending triangling for a long time now. It got down to that 100. It bounced out that 100. I think you want to take a short. Anytime this thing gets up to the 110 area, I think that is a great time. And I'm looking at the 100, 120 bear call spread for about 3 weeks out. Basically saying, I'm going to give this thing 3 weeks. If it does break down, I'm going to make a great return. If it doesn't, I've got everything hedged off and squared away. So that is it for trades. Let's take a look at tomorrow's outlook. How much will Netflix hurt the markets? We'll have to see. Like I said, I don't think it's all that bad. Netflix is one of those where it's kind of its own animal. If it was something like Apple or Google, those things actually pull the whole market down. Netflix, not so much. I still think we are just stuck. I still think we're stuck. And I don't think that you can be overly bullish or bearish on the markets here. I think you just have to kind of wait and see where we're going to break. I still personally think it's going to be lower, but I am absolutely open to the possibility that it's higher. And if it is higher, then I'll go more net long. But if it does break down, I'll just go more net short. Remember, at Maverick, we always trade the market in front of us. Economic reports tomorrow, nothing big, building permits, housing starts. And as always, we are in the thick of earnings season. So check earnings on all your positions. Make sure you've got the right risk management strategies in during those earnings. That's the market roundup. Thanks for joining me, everyone. Goodbye.